Hello, everyone. Thank you for attending. We are now live. I'm just going to give the room a few minutes for any late people to come. But we do have a nice panel today. It's the Geo-Politics of Gold, hosted by Six. And today I'm joined with Dan Wilton from First Mining Gold, Andrew Dining from Cerama Resources, Jeremy Link from Caboclo Gold, and Wes Hansen from Thunder Gold. So you can see we have a lot of people here today. We might not have time to answer any Q&A questions in the chat, but I encourage you to still submit any questions you may have. At the end, we might have time. Since it is limited in time, please use the upvote feature if you like a question someone poses, and we are trying to get to the most upvoted questions first. As always, this event is being recorded and will be available at six.com in the coming days, so I hope you enjoy. And I think that's enough time, gentlemen, that we can get started as we have a lot to cover. And I will let you have a chance to plug your company later on, but I want to get right into the conversation, which is the geopolitics of gold. And maybe I'll start this with a very broad question for the group. What is your view of the world in the next 3 years? Are you pessimistic? Are you optimistic about the price of gold or the overall economy? And with that, I guess I'll kick it off with Dan.
Well, thanks, Kyle, and thanks everyone for joining us here today on this very interesting and germane topic to all of us as gold investors and those of us running gold mining, gold development companies. Am I optimistic or pessimistic? I think I am walking a bit of a balance there, but I think, to be honest, the course of 2022 shook a lot of us. In terms of, where we are geopolitically, like the fact that we're now a year on, full-blown war in Europe, which a lot of us didn't ever really think that we would see in our lifetime. The fact that, interest rates have continued to rise and we're still seeing inflation, we're celebrating 6 and 6.5% inflation prints, which, in case anyone missed that, that's still 3 times the target. What's happened with rates, and I think what happened with gold through 2022, and particularly in the fall of 2022, caused a lot of us to kind of scratch our heads and wonder if all of the those well-held fundamental premises that we've held about why and when gold should go up, when all of the background and macro backdrop was there, but the gold price didn't respond. And then, of course, we saw toward the end of the year bounce up from 1,600, and I think a bit of a more rational move here. It's still, I think it's still undervalued. I think gold still has a lot of room to run, particularly if you look from kind of a peak to trough cycle. But am I optimistic going forward? I think we're going to see rates come down. I think I think we're going to see rates come down, but I don't know that we're going to see inflation come down. And when I think about what the macroeconomic scenario is that should really propel gold, a part of it is like we just need to come to realize that we're not going to be able to control inflation with rates in the way that we thought that they were. And so, people's purchasing power parity is being eroded year on year, week on week, and we're seeing it, at the grocery store every time we go. So I probably lean on the macroeconomic and global political front on pessimism. But I think I'm very optimistic for what that means for the gold price.
Yes, thanks, Dan. And I think a lot of people kind of agree on that on the macro front, but I do want to hear everyone's 2 cents here. So why don't you start, Jeremy, again with 3 years out, optimistic, pessimistic?
I'm generally cautiously optimistic. Is what my position would be on this. I continue to expect the headlines to be dominated by geopolitical tension, trade conflicts, particularly between the U.S. and China and their various proxies. And I think the potential hard economic times is still very much, a real possibility out there. Overall, that should correspond to, increased demand for gold as a safe haven asset. So I think these factors, my position is that we'll continue to have a strong gold market for the next 3 years.
Thank you. And Andrew, your 2 cents?
Yeah, I guess I concur with quite a bit of what Dan said. I think the geopolitical, global geopolitical environment is only going to get more complex. Obviously, I'm online from Perth in Western Australia, so we're fairly focused on what goes on in the Western Pacific, with China, Taiwan, whatever. So I do think that is going to have an increasing. I don't think the tensions there are going to decline. Put it that way. I think when it comes to gold price, for a long time I thought there's more reasons for gold to go up than down. I think you're seeing a lot of debasement of currencies, and that's probably accelerated in the last couple of years. I don't see that changing. I think Dan made the comment that even though the inflation print might drop, the cost of living is still going to go up, and when you work in the industry, the cost of operating is not going to come down. So I think there's a number of reasons, whether it's geopolitical, but I think geopolitical events tend to have a shorter term impact on gold price. I think it's more the debasement of currencies that probably going to have a longer term impact. I guess I am optimistic on which way the gold price is going to go over the next couple of years. I thought it would have moved more than what it has now, but if you take a 3-year perspective, I think it's only going to go one way. I think if you look at the cost base of the industry, probably not much gets built below $1,500 gold now either. So I think that cuts out a lot of projects if gold does pull back, and I only see that tightening as well.
Thank you. And Wes, you, for the next 3 years, optimistic or pessimistic in terms of gold and the economy?
I think absolutely optimistic, or I wouldn't be here running a gold mining company. I mean, this is why we're all here. I think we have a view in the long term, the short term and the long term fundamentals of gold, and I think they're all solid. The geopolitical factors, I mean, everybody sort of touched on different ones, but I mean, it's odd to me that we're dealing with geopolitical factors that I kind of thought were gone forever. From 25, 30 years ago, right? And I don't think politicians today understand how they're going to deal with those factors. You've got an emerging, China emerging as a, dominant economic factor in the world today, and challenging the United States for, their rightful place as the #1 global economy, and China's moves are dedicated towards moving towards that position, and the U.S. moves are defending that position. So. And you've got Russia on the outside, kind of looking in, a former world power of, the #2 world power or the #1 world power, depending on how you look at it. And all of a sudden, they've been supplanted by China and the U.S. And yeah, it's an interesting dynamic to see what's going to play out in the world today. And in terms of fundamentals, that's going to have a big impact on gold price going forward.
That's a good segue to my next question, actually, Wes. So maybe you can kick it off the first answer. But as this is a panel for the geopolitics of gold, there are quite a few countries that buy gold and can have a material impact on the price. China, Russia, India come to mind, whereas the United States might prefer a lower gold value, right? Dollar. So could China or the BRICS nations weaponize gold this year? Is that a realistic scenario? Theoretically, it would result in a value surge of gold and their currencies, while a depreciation in the US dollar.
Well, I think you're actually somewhat seeing some tentative steps towards that. And I'm not an economist, so I'm not really qualified to speak about these things. But I mean, you're certainly seeing a move by China to sort of cozy up with Russia and possibly India and Iran and a couple of other countries to sort of generate their own, to try to get the world off of the US dollar as being the standard currency of global business, right? I mean, that's, the reason gold hasn't performed as well as a lot of us think it should have in the past few years is simply because the US dollar is a stronger, more attractive investment currently. Is that going to continue? It's difficult to say. Like, you're seeing a lot of buying, I think, and on behalf of the central banks of, countries that are not the United States or Western European countries. I think there's a reason for that. I don't really know what that reason is currently, to be honest.
Thank you. Andrew, do you have a reason for that? Do you know why, or do you have an opinion for the BRICS nations maybe weaponizing gold this year and the years to come? Your 2 cents?
I don't see them weaponizing gold, but what I do see them doing is just really undermining the influence of the US dollar. I think it's going to take a long time, to negate the US dollar influence. And I guess we operate in Africa, so we deal in multiple currencies all the time. But we're also looking at, countries where we work and near where we work, trying to move away from trading in US dollars, but there's not a suitable currency. I do know one country who's seeking gold basically to transact. My view, it's probably to transact with Russia because they can't use euro or dollar for that. So I think what we're seeing, particularly with the war in Ukraine, is causing a reweighting of how people trade. Whereas before you could easily trade with US dollars, now it's difficult. So, with the various embargoes on Russia, its trading partners, forcing them to take different routes for transacting, whether it's, making people trade in rubles or other kinds of commodities. I think, gold per se won't be weaponized, but what I think you will see is a diversifying at the fringes away from the dollar. But, the dollar is something, I think what makes it attract to everybody is it's highly liquid and you can move large amounts in and out very rapidly. I don't think there's any other currency or commodity that you can do that with, but it doesn't mean that if you have long-term contracts or you're somebody who's, affected by various US embargoes, that you aren't going to seek other avenues. And I think that's partly what's driving, Russia, China and others to diversify away from the USD.
Yeah, you know what? I think you answered that really beautifully, Andrew. So I'm going to move on to the next question actually here. And this is more toward our Canadian operators on this panel. There are quite a few. So I'd love to hear some opinions on this ever increasing federal incursions in provincial jurisdictions. And I'm going to pose 2 questions. So feel free to answer both or one. And remember, just spare time for the other speakers. So the first question is, are Canadian federal-provincial relations at a low point? And is that something that we should be concerned about in terms of supply chains and excessive inflation? And the second question, are you concerned at all that Canada, Australia, or any country for that matter is focused on climate change and these net zero goals may be clouding over the necessities and emphasis of the underlying economy? So Jeremy, why don't you take this one off and both questions?
Sure. Yeah, I think there's definitely ongoing tensions between both the federal and the provincial governments. And we've seen the same in Australia between the state and the federal government there as well. Each one of these provinces wants to get its projects moving forward, and the federal government is not really helping on that front. You really see that happening right now, in Alberta. So that does have an effect on supply chains and inflation. And, that just creates uncertainty, and that leads to higher costs and lower investment. But, in Canada, we're a pretty resilient group. We've got a diverse economy. So I think that we will weather through these challenges. There will be changes in governments on the horizon, and we'll continue to be able to be a reliable supplier of natural resources and other commodities, including gold. And then on the environmental front, I think everyone is committed to reducing their carbon footprint and minimizing their emissions. And I think that's something that's going to continue to be a focus because governments have made it so, and that we just need as a business to work towards meeting these mandates while still being able to create value for our stakeholders, which I think is very possible.
And Dan, if you need me to repeat the questions, please let me know. But what are your thoughts on these federal incursions in provincial jurisdictions ever increasing?
As a company that's in the middle of a combined federal and provincial environmental assessment, I'm going to reserve a little bit of my commentary on that. Listen, what we experience is, we have, going through those processes, we have had very good support both federally and provincially. I think there's always going to be a bit of that tussle, particularly when it comes to project permitting, because you have, federal ministries of the environment, for example, on issues like caribou, which are germane to our development at Springpole. And you have provinces that have jurisdiction over actually implementing and all the regulations on these things. So there is that kind of clouded line between the two, and I think it's all with good intentions, but federally, provincially, I think that the bigger issues on federal and provincial relations, I think, come down to healthcare and spending. Right, when you want to talk about what's really going to impact people's lives, that's where I've continued to scratch my head as a taxpayer about why provinces are relying on federal transfers for healthcare when provinces should have exclusive jurisdiction of healthcare. It was decided in the Canadian Constitution in 1867. So. Anyway, with all that said, I think they'll continue to work it out. What we hear, certainly, from the provincial governments where we're operating in Quebec and Ontario, is a real drive to kind of reduce red tape, a real drive to reduce those overlaps in the jurisdictions and overlaps in the work that needs to be done. And so, we'll continue to work constructively and help to point out where we think some of those overlaps are and hope those things get resolved. But with respect to the second part of the question on net zero goals, I think society at large needs to recognize, much as sometimes politicians like to claim it isn't so, but society needs to recognize that there are trade-offs that have to be made for us to do this, right? And I think, I absolutely agree with what Jeremy said in terms of, the industry's ability to cope and adapt, as a group that's putting together feasibility studies on a couple of big projects. It's one of the key criteria that you're judging your trade-off studies on is, how are we going to reduce our greenhouse gas emissions, and particularly for open pit mines? That can be tough. What it does, if society says you need to do this and we want economic development, it really does put the impetus back on government and on regulators to be providing clean energy. It's not necessarily a mining proponent's job to build renewable power, although we're scoping that in all of our projects because I think you have to. But it really is in terms of, at least expediting permitting of transmission lines and bringing, real clean energy, incentivizing clean energy to come online. That's where I think you have both federal and provincial policy that needs to come together to say, okay, we want this and we want economic growth. Therefore, we need to invest, and we need to invest as society. So I think there is room for us to get everything that we want out of these. It's just, inevitably, it's going to be a bit of a bumpy road as we figure it out.
No, I agree. And Wes, why don't you continue on with this, with the net zero topic and being in the extractive industries? How is your company factoring in this revived emphasis of being a good steward of the planet? Like, I know we all try and be good stewards of the planet, but we are in the extractive industry, and politics could directly affect your bottom line.
Well, sure. I mean, I think Dan said it very well that, it's not industry's role to develop green energy sources and provide green energy initiatives for the industry, but I think it is beholden on us to adopt and to evaluate any opportunities that there are for mineral exploration, particularly mineral exploration companies, to reduce their greenhouse gas emissions and make things more efficient in terms of their environmental policy and the path that they choose to take, and carry that forward right through to mine development and operation. I mean, it is a greenhouse gas emitting industry. There's just no way around that. But I think we can do better. And I think that this is a chance for the mining industry to take a leadership role in leading that charge and demonstrating that we are cognizant of the challenges that the planet faces in the future, and we're taking steps to address those challenges.
Yeah, I agree. And Jeremy or Andrew, either or, do you see any innovation either within your companies or in the industry that maybe Wes didn't mention that care to mention?
Yeah, I might just jump in there, Kyle, because we don't operate in Canada, and we operate in a very poor landlocked country in Africa, who's dealing with multiple issues, and it's kind of interesting contrasting companies that operate in places like Canada, where you have access to cheap hydro and things like that. Where theoretically it's possible to get your carbon footprint down and whatever, but when you work in Africa, it's not that common that you have access to the grid. It's not that common that you have access to a grid that runs on hydro or something like that. Ghana and Ivory Coast do, but basically a lot of countries are flat out. A lot of countries are flat out just generating power for themselves. So I think when it comes to the mining industry in Africa, if you're not in an area where you can tap hydro, then really companies need to be quite creative. But if I said to the government of Burkina Faso or the local community where we operate, what are your top priorities? I don't think net zero would figure in that anywhere at all, unless they were going to get some funding, international funding for that. So I think different countries and different places have a different perspective on this. Some places it's important, other places it's less important. But I think at the end of the day, politicians and mankind need to kind of work out, what they want to do. How do you want to live? Do you want to live in a modern world, or do you want to kind of go backwards? So, and how do you want to do it? I mean, there's a responsibility to operate, as cleanly and as efficiently as you can, but it's not always practical.
That's great. Jeremy, if you had anything, if not, I'll start you off.
Yeah, no, Geo-Politics is an exploration company, so where we think we can minimize our carbon footprint is by hiring and sourcing people as locally as often as commercially possible. That's a big part of it. Also being in Quebec, to follow on to some prior comments, especially of Andrew's, like in Quebec, we've got hydro, which is low cost, low carbon energy source, and some of the cheapest electricity in the world, which is a big competitive advantage for projects who have access to grid power, particularly power that's from a renewable source like hydroelectric. And so I think that's where mining companies need to focus, is what can they do locally and work up from there. And sometimes you just don't have those things available. Like we worked on another project in Africa, and part of the feasibility study there, looking at bringing in a solar as part of the energy solution, alongside a source of diesel. So there's lots of opportunities here for companies to work on their what they can do, and that includes now the electrification of mining fleets too. We're seeing more and more of that appear in feasibility studies and at actual mining sites.
I mean, I've probably only got one other comment to add there, that if you want to look at geological opportunity, it's in Africa, and it's not necessarily the geological opportunity is great in Australia, Canada, elsewhere. The timelines of production, decades of time. But I think if you want to look at geological opportunity, it's pretty much unexplored continents. They're very difficult to operate in. If you're chasing big copper deposits and things like that, it's kind of Africa, South America. Yeah. So it's an interesting, very, very interesting dynamic.
Yeah, do you want to take on, what would you rather take on, geological risk or geopolitical risk as an exploration and mining company, right?
As an investor, what do you want to take on? You can't manage geological risk. It's either there or it's not. But maybe you can manage some of your political. Maybe you can't. That's the age-old question. So, I'd love to be in a tier 1 jurisdiction with African type ore bodies. That'd be a Hollywood solution, but unfortunately, that's not how it is.
Yeah. Well, let me ask this to the group then. Geology, but what geology of what? Just gold? It sounds like everyone is in agreement that...
I mean, I meant more like the technical risk of developing a project. Do you want a project that's easy to mine or in a less desirable jurisdiction, or do you want something that's difficult to mine in a good jurisdiction?
Okay, I'm gonna move on to this next question here because I want to ask specifically about what we're mining here, and everyone here is on the topic of gold, and everyone, it sounded like, is in agreement that gold should be at a higher price than it actually is. So my question to the group, and I'll start it off with Dan, maybe, why not go where the money's going? Which it may sound like critical minerals and battery metals is the space to be. It's gaining a lot more support from governments worldwide. So is gold, which many view as irrelevant, the commodity to be in? Why don't you make the case for gold, Dan?
Well, listen, I'll make the case for gold with, 5,000 plus years of human history and human nature of using gold as a store of value, right? And it's fine that governments are geopolitically, trying to encourage development of other minerals that right now the production is concentrated in, some call it geopolitically unfriendly jurisdictions. The reality is the world supply chain is at risk of being hijacked, and it's any number of critical minerals that you might need. So I think it's good policy to encourage that. I've had some experiences earlier in my career as a private equity investor in developing or investing in companies developing large industrial mineral mines. It's tricky, right? In the end, what a lot of people forget is that you have to sell that product. You need to build a market for that product. You need to ultimately, find customers for that product, whether that's, ilmenite and rutile, or whether that's rare earths, or whether that's, different flake sizes of graphite. Like that's a complicated part of the business. The beautiful part of a gold business is you pour a bar, someone sends a helicopter to your site, and they pay you 98% on that day, right? Like you never need to worry about where you're going to sell your gold. And that's a large part of the reason, go back to my corporate finance days early in my career, like that's a large part of the reason why you value gold projects at a lower discount rate than you value other projects, because you don't need to find a customer. You don't, in many cases, you don't even need to find real downstream processing beyond a refinery. So why is gold important? I mean, just look at the number of jobs that the gold mining industry provides worldwide, like high-paying jobs. What percentage of global mining is in the gold industry? It's still pretty significant. I don't know what that number is. I'm going to look it up after this. But, it's a big and meaningful component to the mining business. So why do we, continue moving forward in gold? Well, part of it is, we can't, in some cases, you can't really pivot. Part of it is, all of us have projects in our companies that we think are very attractive, and, we're going to be able to move forward, and are sitting today at horrendously undervalued levels. But, I think there's room for both. I don't think it's an either or. And the interesting part, and one of the things that we're actually doing a study on right now, is what are the other critical minerals that are sitting in your gold deposit that you haven't looked at? All those other elements in the ICP scan, when you get your assays back, like there's a lot of those that are critical minerals. And so, they're being ground. Generally, they're being leached and they're ending up going into a tailings dam. So are there other areas where we can, maximize the benefit of, some of these other minerals that occur coincidentally with gold? In case of our Springpole project in Ontario, it's tellurium. It's a very important critical mineral. I think it's one of the things that we're starting to study, just to understand, how what we're already doing can play a role in developing some of this critical minerals.
Well, frankly, Dan, you almost left me speechless there. That was an excellent answer. But I will change the question a little bit there for Wes. How about the difference between a critical mineral or battery metal exploration company versus a gold exploration company?
Well, I mean, let's face it. The reality is, I think the world needs both. I'm going to sort of diverge for a minute and say I really like Dan's answer too, and I think he's absolutely on point when he suggests that there's opportunities to be captured in the mining of gold deposits around the world to sort of capitalize on opportunities in the critical metal space as well. But I'm a little against the favorable treatment that battery metals explorers are. They're the flavors du jour, and they're getting all the attention and all the investment dollars right now. But the reality of it is, if you ever showed anybody a piece of lithium, the reaction is totally different than if you show them a piece of gold. I mean, you see, there's gold fever, and you see it. Everybody sees it every time anybody presents somebody with a piece of visible gold, especially a spectacular piece. And I mean, gold production has done nothing but increase over the last 100 years. I mean, gold has been dead for as long as I've been in the mining industry, mining for gold. So, the value keeps increasing, the opportunities keep increasing. I think there's factors at play in the world today that are frightening if you really consider things in terms of like the events in Europe and the possible events that are going to spread outwards from nationalistic movements around the globe. So all of those factors point towards appreciation of the gold price, and at the end of the day, there's still more gold being consumed than there is gold being produced. I mean, we rely on over 1,000 tons of gold a year to be refurbished from the sale and the remelting of jewelry and electronics and so on and so forth. And there's a lot of more electronic devices that are coming onto the market that require more and more gold. So there's lots of positive impacts going forward in terms of supply, demand, and geopolitical factors that I think point to a good future for gold prices and gold investors.
I agree, and I think everyone here is in agreement with that. So I'll get a little more granular on that point, and please try and keep your answers under 3 to 4 minutes, because I know people like to really brag when we start talking about their own company. But I'm going to kick it off with you, Andrew. And since everyone is in agreement, like, if you want to get into a gold mining company or exploration company, why don't you talk about your company specific, and why is it a company worth considering when there's hundreds of these gold stocks out there?
Yeah, thanks, Kyle. Yeah, I think Sarama, we're I think like most companies, we're pretty undervalued relative to what we've got. We obviously operate in Africa. We've got very low cost of discovery, but our primary project is close to 3 million ounces. A third of that's in oxide, 2/3 is over 2 grams. We've got line of sight to a mine development. It's already through a scale where you can develop a mine. We're pretty well positioned project wise. We've got a large land holding. There's still a lot of exploration runway on there. So we're in the middle of a 50,000 metre drill program now. We've completed about 20,000 metres of that. We've got 7 new discoveries in the main mineralised corridor, which is about 12 kilometres long and 1.5 kilometres wide. So there's a lot of exploration runway, but the project's already over the critical threshold. We trade at pretty heavily discounted rate. And I think the other thing as well that the market misses is we have Endeavour next door to us, and they've consolidated everything around us. Their Bantu project next door is about 1.5 million ounces. So, if you include that, there's in our vicinity of our main Tankora deposit, there's 4 million ounces within about 6 kilometres, and most of that's within 150 metres of surface. So, when I was talking about geological potential before, that's kind of what you're talking about. So I guess in short, why invest in Surama? We, pretty good value proposition. We've got a pretty strategic position in Burkina. There is a consolidation opportunity there with Endeavour, and I think something plays out on that at some point in the next year or so. There's still a lot of exploration ground, but the project's already past the point where it needs critical mass. So I think for us, we're pretty excited by the position where we're at. It's obviously challenging capital markets, but project-wise, that's moved very well. Stuff's still getting built in Burkina. It's getting built on time, on budget, and the latest example of that is Ozone. So it won't take anybody else's time, but that's a quick snapshot of the company.
Thank you. Appreciate it for being brief. And Jeremy, why don't you talk about Geo-Politics of Gold, and why should listeners of this panel consider your company?
Yeah, thanks, Kyle. So Geo-Politics, we're a relatively new public company. We went public, I guess, 7 months ago. The first reason to invest in any company is the team. You look at the people. We've got a highly skilled team that are dedicated to working on this project, and we've had success in the past. The company where we all worked at previously, Admiral Gold, was acquired by Endeavour Mining, and then following that, we got what was considered to be told to go back and find another one of these types of deposits. But rather than going to Africa, where I think is very competitive for good exploration projects, we turned our sights to Canada, particularly in Quebec, and we found another project that we feel is very similar to what we had at Admiral Gold. Our project is 55 kilometers north of Val-d'Or, one of the best mining jurisdictions in the world. And our strategy is clear. This is a project with a fair bit of historical drilling, in which we're going out to verify those historical results. We're running an 11,000 meter, 67-hole drill program now, which is going to wrap up this month. And our target is to report a maiden mineral resource but before the end of the second quarter. And we're looking for something of size, just like everybody else is, based upon the historical drilling, which is almost 800 holes. We see the potential for 20 to 33 million tons at an open pit grade of 2.7 to 3.6 grams per ton, which I think we would all agree would be high grade for an open pit project in today's market. And if you do the math, you'll see we're looking for a multi-million ounce deposit there, something on the order of 1.7 to almost 4 million ounces. And so, we've just started working here. We're getting moving on it, and it's a really good opportunity. When we started working on at Abno, we had a market cap of $15 million. 3 years later, we were acquired for about 160. So I think we're hoping to repeat that success, but in Quebec rather than in West Africa.
Thank you. And Wes, Thunder Gold, my hometown of Thunder Bay, is Project Power Mountain. Why should any listeners consider Thunder Gold as an exploration company in their portfolio?
Well, like all gold companies were undervalued relative to our peers. It's a fantastic opportunity to get in early at a very low share price and participate in the upside. Look, I've been doing this for 40 years as a geologist. I've explored for projects, I've developed projects, I've operated projects. This one really excited me, and it excited me for a number of factors. First of all, it's located in Ontario, which is an outstanding mining jurisdiction. It's less than 50 kilometers from Thunder Bay, which is a huge benefit. Thunder Bay is a port city, so it's got the infrastructure and the labor force right there for us to benefit from without having to fly anybody or build any roads or anything like that. It's a property that sits right beside the Trans-Canada Highway. There's no significant bodies of water to get in the way or cause any future environmental problems. It's an area of reasonable topographic relief. It's called Tower Mountain for a reason, and the reason why is there used to be a fire tower on top of the mountain that was there. So it's it has a lot of factors, and most of all, it's got gold in it, and a lot of gold in it. And it appears to be a different type of deposit for Archean greenstone belts in Ontario, which are largely structurally controlled gold deposits. This seems to be more of magmatic hydrothermal type deposit, which basically explains the large prolonged intervals of over 100 meters, 200 meters of anywhere between 0.3 and 1.2 grams per ton. So it's an opportunity that you can throw ounces into the mineral resource estimate very quickly through large, basically a wide space drill program. And that's kind of our target. That's what we're working towards now. We've got a drill running. We're testing the theory on 100-meter step outs and basically following up on anomalies that were untested in the past by historical drilling because they were looking for a different type of deposit. So we're hoping to capitalize on opportunities that were missed by others.
Thank you, Wes, and thanks for keeping it brief. And Dan, you're the last one, but please try and keep it brief because we do have questions in the audience I do want to get to. So just because you're last doesn't mean you get the longest, but the floor is yours.
No, I appreciate it. I'll try and keep this brief. I mean, for First Mining Gold, important thing to know is that we're sitting today with 13 million ounces of gold on our books, primarily contained in two projects, 5 million ounce project at Springpole, which is in advanced stages of environmental assessment. And the Duparquet project in the heart of the Abitibi, which we consolidated toward the end of last year, and actually continue to consolidate a land package over the course of the last month, having acquired some ground from IAMGOLD that actually connects the Duparquet deposit to the Pitt and Duquesne projects that we already owned. So in total, there are about 6 million ounces in the heart of the Abitibi. And with that project, there's, I think, a higher grade core that we put out a resource in September that shows within that, in the grade sensitivities and the pit shells, a higher grade core that we're starting to move forward on the development track to understand what some of the development options might be there. So two, if not world-class, knocking on the door of world-class projects in fantastic jurisdictions. Our Springpole project is about 100 kilometers from Red Lake, Ontario. And importantly, surrounded with major exploration potential. So at Springpole, we've consolidated a large part of the Birch-Uchi Greenstone Belt, which, very rocks to the Red Lake camp, where we have 4 different styles of mineralization that we can target through exploration, and actually have kind of kicked off really our first regional exploration program there in the last few months. And at Duparquet, we have a 5 million ounce deposit that's really only drilled it was mined down 500 meters in the 30s to the 50s, and is very sparsely drilled below that. But everyone knows that in the Abitibi, your real deposits don't start until a kilometer down anyway. So, pretty good starter kit. So I think tier 1 jurisdictions, resources of size that aren't reliant on exploration success to deliver more gold, but yet have exploration opportunities that can see these go from being, potentially world-class to bona fide world-class deposits.
Perfect. Thank you all for those company pitches. And now we do have time for Q&A from the audience, and we do have some questions here. One from Russell. Gold stocks performed poorly in 2022. Is it entirely possible that 2023 misses the mark? And you all have been around this space for some time, and we know gold might not perform when you want it to perform. But Andrew, do you want to kick off that question? Is it possible 2023 misses the mark as well?
Well, I'm not Nostradamus, but I think things are fairly well set for this year, I would have thought. We've had a bit of a false start in January, but it does kind of feel that a lot of people are positioning. A lot of the people I speak to, running smart money, either in funds or PAs, kind of going long gold. So I think that's a fairly positive sign. I don't think all the markers are there, but I think I'm fairly optimistic that this year should go okay. It's just how well it goes. But I think if gold can, push through, 1950, 2000 and hold there, then I think, we'll be off to the races.
Thank you. And LP Weirden had a question, and maybe Wes, you can start this one off, and I'll get a couple opinions on this one. But what's the typical delay between gold prices going up and junior mining gold stocks going up? What causes the disconnect?
Drilling. No, I mean, look, we're for junior companies that are in the active business of exploring for gold deposits. We've got to be out drilling. We've got to be out demonstrating potential to expand our resource footprint and taking advantage of the market conditions. That's our entire reason to exist. We're kind of in a different situation. Dan's in a fortunate position where he's already got his resource drilled off and he's working on harder challenges, but you know, it's really, you want news flow and you want to demonstrate to your investors that you have an opportunity to increase the size of the deposit, that you're delivering on the promises that you've made to your investors when you go out and you say things like, our plan is to demonstrate potential for a multi-million ounce discovery with our current drill program. If you go out and you do that, then I think investors will see the opportunity going forward, and you'll attract new investors, which will allow you to continue your exploration success.
Thank you. And Dan, maybe you can continue that with the harder challenges that Wes stated there. What is the disconnect between the fundamental commodity price and the junior stock?
Well, I think having been around for a few cycles and seen how it plays out, inevitably gold price usually moves, and I think it was Wes that said earlier, you know, on geopolitical events that tend to cause short-term moves in gold. It's kind of a reaction to you know, outside events. But when the gold price moves, you usually see gold producers move first, right? And the gold producers have natural leverage to increase gold price because they're producing and selling gold, and every dollar increase in the gold price is, you know, a dollar increase in the price they're able to sell their gold for, and it's a dollar increase in free cash flow because their costs are going to be what the costs are going to be by and large. So typically the producers move first, and the large cap producers move first, and then you know, that will trickle down to, you know, intermediate and smaller cap gold producers, which always tend to trade at slightly lower valuations. And once those have started moving, then typically you have this gap that develops between, you know, explorers and developers and producers. And this gap can persist for periods of time, but usually, at least historically, that gap gets closed by the M&A market. And it gets closed because gold producers are generating excess free cash flow and by and large have not been successful in their own exploration or development endeavors, or don't have new projects to develop, and they need to replenish their pipeline. And so they go out to acquire projects, and the valuation discrepancies are usually, you know, in functioning markets, you know, senior producers trading at, you know, 1 to 1.5 times NAV. Junior producer intermediates at, you know, 0.8 to 1.2, and junior producers at 0.6 to 1, coming to buy projects at 0.3 to 0.5 times NAV. So they buy them, they're accretive, and then they move them forward and develop them. So there is typically that lag. I think one of the things that can also help close that is when you're in a positive gold environment where there's a lot of funds flows that are coming into the sector, then those funds flows need to be deployed. And at some point that sort of accelerates the closing of this gap as well, because investors look at, you know, more expensive gold producers and eventually decide to come down in the development curve for value. So that's, I think, a large part of that disconnect. And what we haven't seen, you know, a number of us have seen it in different aspects of our career, but what we haven't seen recently is a big, you know, surge in the M&A market where you have producers looking to add to their pipelines. It hasn't been happening, but it is inevitable. It is inevitable because every ounce that a large cap gold producer produces, it no longer has in its reserves. So it needs to find more. And sometimes, you know, they have other near mine exploration, which helps stretch those mine lives. Sometimes, as we've seen in this past year, and this is the canary in the coal mine, they start dropping their cutoff grades or increasing the gold price at which they calculate their reserves so that they can show reserve growth without actually having grown their reserves. And that's kind of the start of the industry admitting that it needs more development projects. So it's a little bit of a tangent here, but I think it's an important one because ultimately, most explorers and developers, very few sort of take these projects through all the way on their own, and you're reliant on this sort of external factor of the M&A market to sometimes deliver extraordinary returns to shareholders, as Jeremy was talking about before in some of his prior endeavors. So yeah, I think that delay, the longer that delay persists, I think the bigger the opportunity to be investing in explorer and developer gold companies.
Perfect. Thank you, Dan, for that answer. And we have time for one more question here. And since Jeremy, you didn't answer any questions from the audience yet, I'll direct it to you. It's from Russell. In evaluating...
First, I think I have something I'd like to add on to the last question, just really quickly, is that, as people pointed out here, there's a strong correlation between gold price and the larger companies, particularly the producers. But in the junior space, what you often find is that it's either, like particularly exploration companies like Kiboko, it's news flow generated. So either you have a new discovery that's exciting. We all remember the Great Bear story. It didn't matter if the gold price was up or down. That was an exciting story because it was high grade and it was new and it attracted a lot of attention. What you also see in the junior space is when companies achieve milestones. The number of investors that are interested in exploration companies in the gold mining space is small. As you define a resource, that number of investors increases, and then as you move through feasibility, development, and a producer. And so investing, when I put on my investor hat, it's all about trying to find the right opportunities that are going to go from exploration to resource development, move up that valuation chain. You got to keep moving projects forward, and that's how you end up having steps in valuation. And as your market gets as your audience gets larger, so does your liquidity and hopefully your share price as well.
Perfect. And that go ahead and continue on with this because this is kind of
okay. So when we look at a project,
what significant merits do you look at?
Yeah, so the biggest merits that we look at are, for us as an exploration company, we want to reduce as much risk as possible. So we like to see historical data, whether it's of high quality or low quality, because that really lowers your technical risk, because you don't want to be often the first one to drill a project. You want to be the third or fourth person, so you've got a lot of data to work with. That's an important part of it. We also really focus on contained metal, which the regulators don't like you talking about. But from a mining and exploration point of view, that's what it all comes down to. How many ounces are really in the ground here? And then what kind of tonnage do you have and what kind of grade? Because ultimately grade is king. And so from my point of view, when I put my investor hat on, we only look for, and our CEO hat, my CEO hat at the same time, we only look for high grade deposits. Those are the ones that get funded regardless of market conditions. They are what guys, larger companies want to acquire. And as a result, it allows us to be a bit more, agnostic on gold price. We just want to focus on grade and tonnage together. Those are the most important merits for us. Political risk will always exist. Political risk always changes. For sometimes certain provinces in Canada are great places to invest, and then a couple of years later, they're not, and then they come back and forth. So we really focus on the technical merits of a project first over the geopolitical ones.
Okay. Thank you, Jeremy. And with that, we are running low on time here, so please keep this within 60 seconds, everyone. Just if anyone is interested in getting a hold of your company, what's the best way to get a hold of you? Maybe plug your ticker symbol. Jeremy, why don't you go ahead and tell the audience how they can...
Yeah, I encourage everyone to add KIB to their watch list, and you can follow up with me directly. My email address is at the bottom of every news release, as is my phone number. And just go ahead and reach out, and I'm happy to walk you through the Kiboko story and where we've come from and where we're going over the next few months, which we're targeting to report our maiden mineral resource for Harricana before the end of the second quarter of this year, which is really only 4 months away.
Perfect. Thank you. And Andrew, how can people get a hold of your company and you?
Yeah, Sorama's dual listed, so if there's any Australian people on the call, which I doubt at this time, but Our Australian ticker is SRR and our Canadian ticker is SWA. Either go through our website and contact us through our info email, or dial the office directly. It's probably the simplest way to get a hold of us.
Thank you. And Wes, for Thunder Gold?
We're a TSXV listed company with the symbol TGOL, and I encourage anybody to follow us on our ticker or go to our website at www.thundergoldcorp.com.
Thank you. And Dan?
Very similarly, lots of information on the website, www.firstmininggold.com. You can reach out through that, or info@firstmininggold.com. Lots of different ways to continue to follow us. Ticker symbol on the TSX, FF, and OTC in the US, FFMGF.
Perfect. Thank you all for joining me today. Thank you all for listening. As always, this event will be recorded and will be available at sick.com in the coming days. So you can check it out later, the pre-record or the record. But gentlemen, thanks for joining me. Appreciate it.